The bull market lives on and the financial revolution is starting. What's up, everybody? Welcome aboard to Bubba's Bottom Line, our weekly edition of what's going on in the world and what we're thinking going forward. And of course, last week the melt up continues. There's no stopping it, especially if you look at Thursday and Friday. We just went almost parabolic to the moon. Volume started to pick up a little bit. Even the volatility started to show up a little bit, and saw some amazing moves throughout the weekend. I think there's some amazing stories to be told. And I think just some of the quick highlights from last week, the Treasury bonds were on their way to get clobbered, pushing interest rates higher. And out of nowhere, like magic, I don't know how it happened, but like magic, the Chinese came in and said, well, maybe we're not going to buy bonds anymore. And of course, the bonds immediately reversed. It was kind of like almost the usual orchestrated manipulation between many of these central banks throughout the globe, and suddenly the Treasury bonds were back in vogue again, and maybe China was buying them again. It's an interesting dynamic just because the Fed needed to have the lower interest rates. Again, they don't want them to get away from them, which they definitely will when the time is right. So, they will continue, the Fed will continue their record of never being correct at calling one of these situations out. The talk of the bubble in the cryptocurrencies continues, but no talk of a bubble in the stock market. God forbid they should say that the stock market could possibly be in a bubble. And of course, we had the earnings start last week in earnest with JP Morgan, and their earnings were okay. They missed on a couple of areas, but of course the stock continues to power higher. Now, one of the things you got to wonder about to yourself is if the interest rates are going to be held low or artificially low by the Fed, why are the bank stocks exploding to the upside? Their final piece of their puzzle is waiting for higher interest rates so they can make more money. Not a real logical situation here, but we saw oil continue to plow forward. I continue to say that it may go higher, but it's being driven on fear, not on any other reason. You can listen to all the people out there telling you about the fundamentals underneath oil, but at the end of the day, oil is in backwardation, which means that June oil is cheaper than February oil. That's not the proper formation for the start or the continuation of a bull market. That's a fear trade. Go back and look at July of 2014. You will see the exact same setup, and markets have a history of repeating themselves. Gold continues now for the fifth week in a row, exploding higher, breaking over the weekly close. 5 weeks ago, it closed below the 1265, which was a key level. Now it closed above 1330, which was a key level. Now it looks like it wants to go to the upside. It's been basically going parabolically straight up. So every market seems to be wanting to go straight up. The euro currency is now exploded to the upside. The dollar is getting slaughtered. Everything is as it should be. If you want to, the big bull market is on, and of course, why is the dollar failing? Because I think what you saw there is that the dollar has to fail. If interest rates are going to try to get away, the dollar has to get below to keep the interest rates from rising as well. That's another way. That was the old backdoor interest rate hike we once talked about. And I guess the big question now is everyone in the pool, right? Are we all long the stock market? Have we all decided that this time is now different, that we're not going to have a sell-off anymore? It's going to be 2 years right about now that we have not had a 3% sell-off or more in that period of time. 2 years, the longest in history. So again, I'm not telling you that the markets are going to go down here. I'm not telling you anything. I'm just saying it's interesting to watch the overall market action and how the things get manipulated around to make everybody kind of happy, except for, of course, our farmers are not happy because they've got crops that are going to start to go into the ground that they're going to have to plant at losers to begin with. We had a USDA report, you know, these government reports and these reports. I mean, the Fed, the USDA, you got to laugh thinking about these folks. In the meantime, they were not very friendly, and we saw wheat get clobbered, down about 12 cents on Friday, and you had corn lower, beans were a little bit higher, but they're in trouble. I mean, you got prices that we haven't seen again for 25 years in relationships. So where's that inflation? Where's that drive? Where's that growth? You've got all kinds of things happening between the markets that continue to just go up. There's not even a thought of selling. During the internet bubble, the markets at least had some two-way trade, and you had a chance to get long and then watch it go up. Now you just have to chase them up if you want to get in, because there is no more dips. But I think the bigger story here is just the way that it's plowing forward and the reasons that we're hearing. Now, again, I have not seen all of this tremendous, dramatic growth that we're talking about, that we're seeing. And maybe it's coming. I tell you what I do see, though. I do see credit card debt continuing to blossom. And again, that is not going to be good. I continue to see margin debt growing, okay? Now, when you look at margin debt, okay, margin debt is people buying stocks with money they don't have and they can't afford. So when we think about it all, is it going to be something that is the overall, the perspective of what we're looking for, okay? And that is something that I think that we just have to watch and focus on, right? Because again, the end of all markets does come when the debt overreaches. Now, again, we've been able to accept more debt in today's society because A, it's become more real life, because B, the Fed continues to keep the rates much lower. But what happens if the rates do change and do suddenly start to go higher? That is something that we have to now look at from the perspective of what can happen. But of course, this fear of missing out and missing on any market is really started to wreak havoc with everyone as you continue to see stocks like Boeing. Okay, now Boeing's a good company, but Boeing up 13% this year already. That's like a 5-year move for Boeing. You've got Caterpillar. You've got all of these what we would call safe stocks, or what used to be safe stocks, making moves that are unheard of for the type of equities that they are. So again, these are always late signs that come into a market that is showing you that everybody is diving right in. And when that happens, if you remember this, and we've said this for a while, is the markets, you are being forced to invest into one asset class, which is the equity markets. There is nowhere else to go, okay? So you are being forced into equities. And there's nothing wrong. I love equities. I'm long equities, and I'm not upset about it. I'm not upset that the market's going up. But, short term, I'd like to be short, to be honest with you. But long term, I'm not getting out anyways. But the point is that equities are one of the greatest single compounding events you can create. But at some point, you have to wonder, can they continue to buy? Can they continue to push them higher? And does this all make logical sense? I mean, when you start to see moves in a market that is now up again, 3 or 4% for the year again, right after following the continuation of the rally. When you watch the Russell and the NASDAQ and you see the explode higher, you have to wonder, where is the money coming from, and when does somebody at least decide to take some profits? And furthermore, that nobody will acknowledge that these markets might be a little bit overdone to the upside, even though every indicator that anybody would watch. Now, I personally don't watch a lot of indicators, but I happen to know what they are. And of course, you see that we've been in an overbought condition based on the Bollinger Bands and RSI and many other things, but yet here we are continuing to push the markets forward. So I can't say that we're going to have a problem. And then of course you look at the consumer confidence. Are we overconfident? These are all things that have happened before. This is not the first time we've ever seen this. You have too many asset classes going too far bonkers, with people chasing and trying to chase down the overall market. And I think that is something, again, this was almost identical to the internet bubble and any bubble before that, when it's just too good. It's too easy. We can't help but you can't help but make a lot of money here. It's like, oh my God, how can I not be in? Which then creates more of the buying fervor, because you never get the little bit of a sell-off. So when we just look back and recap, basically markets up across the board, metals up across the board, dollar got hammered. The only thing that was down, the only thing that was in trouble basically last week was some of the treasury bonds in the grain markets. I mean, really? It's kind of interesting. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line, your weekly edition. And we want to remind you to check out highschoolinvesting.com, because we are trying to educate our high school kids and youth across the world, but starting in America. And of course, we are in 300 high schools right now, looking to get to a lot more. And in our 7th year, but now we're looking for help if you can. And that would be by going to Patreon, patreon.com/Bubba Trading, patreon.com/Bubba Trading. And if you do so, we will make it available to you that you can use the high school investing site to even educate yourself and help out and let you see what's going on in the world. In the meantime, don't forget to get the Bubba Show every single day. New time slot for the old Bubba Show, 4 to 5 Eastern time at libertytalk.fm. Make sure you check it out. Don't miss it. And of course, if you want to get the daily updates from me on a daily basis, all you have to do is go to bubbatrading.com, fill out the little box, and I will put you on the list for free. Every day you get sent out my daily trading updates, my daily information. In the meantime, we will go back to the show. Welcome back to Bubba's Bottom Line. Bubba here, and of course, football weekend, and so far our selections are okay for the weekend. But we now have, as you watch what goes on in the markets, I think something very interesting is happening, and the tax plan and some of the effects that it's starting to have. Now one thing that we've always learned as investors, as traders, markets have a way of pricing things in well ahead of time. Okay, if they're working functionally. Now again, it's a little harder this time, only because there's so much Fed interference in it. But the pricing mechanism of markets usually price things in, and I saw an article over the weekend that everybody who's called for these much better earnings is nuts, so the earnings are going to go even farther than they're going to go and improve. And I find it, and I want to know where all this great growth is going to come from. And listen, I love the fact that companies are growing. I love the fact that people are getting bonuses. I love the fact that they're getting raises. But for example, Walmart gave out raises to their people anywhere from $200 to $1,000, depending on how long you were tenured there. They raised their minimum wage, but they closed 63 Sam's Warehouse clubs. Okay, quietly. Carrier, if you remember, that was the big original savior for Donald Trump, for President Trump, and they're starting to put layoffs in. Now again, I understand layoffs, and I'm not saying there's anything wrong. I just wonder if we're going to have this, and I think a lot of this is very tax beneficial for the corporations giving the money out as new salary and things, and they want to share. Look, everybody wants to have a good economy, so it's not like we don't want it. But I always wonder some of the motives behind all this and why it's happening. And I hope it's happening for the right reasons. Of course, then you have to listen to people like Nancy Pelosi. I hit myself in the head where she starts talking about these are crumbs. Now, if you get a $1,000 bonus, that's $40 a week, so it's $1 an hour if you're working a 40-hour work week. I don't call that crumbs. I think that woman has lost her mind and has gone over the edge. I mean, of course, she's only worth a couple $100 million, right? So, what's the big deal for her? She can talk that it's crumbs. But I think this whole political setup is creating even more of this fervor into the markets as it looks like they're starting to take over. And I think that, we're going to see a continuation. But I always wonder as to where and how far this can continue. This is not the first time that the markets have acted like this in the history. This is the time. We're in what we call the great melt-up. All right, when you start to see action like this, you can go back to 07, 08. You know, in 08, in January of 08, wheat traded 21 cents in Minneapolis wheat. That was kind of the sign. That was another sign of things going bananas. In March of 2000, okay, 2001, the NASDAQ, when it actually really topped before obviously the big sell-off. But again, we're not predicting the top. I'm just saying you have to kind of watch how the overall action is trading here and how the markets are actually working. Because when you look at, you know, where are people trying to invest and where are they going, and you now look that they're all trying to run in to some of these safety stocks. In the meantime, you look at the utilities index is way down. Stocks like Procter and Gamble are down. You know, we're giving up that safe haven play, which is where many of the retirees would like to be, to have a safe play. We're now going into the gambling world, okay? In the meantime, out of nowhere, on Friday came an announcement from Facebook about their media. Now, it was down about 4 or 5% on Friday, but there could be more. You know, there's a lot more to this story that meets the eyes. And I'm wondering, and again, I'm not saying, I'm just wondering, was the dip buying that kept it even where it was on Friday just temporary? Does it have a lot more room to go on the downside? And that is how markets start to turn. Now, I'm not saying this is it. I'm saying this is things that you start to see. Out of nowhere, Facebook comes out with a brutal announcement that just whacks the street a little bit. Markets overcame it, no problem. But these are things that start to show up out of nowhere before one becomes the true potential black swan, okay? So, you know, how could we be this wrong? And I'm not saying they're wrong. I'm not saying that we're doing anything right now. I'm saying that I would be very careful and very cautious here, because I think that you've got some very big issues that are around the corner. I think that there's a lot of things that are happening that are not necessarily totally logical from the big scheme and the big story in life. And we have not seen, you know, we hear a lot about there's going to be new factories built here, and God bless. Again, really, I mean, I'd love to go back to when things were manufactured in America. I'd love to go back to having all this. And of course, you then had, over the weekend, you had a little bit of a panic, fear, scare in Honolulu about somehow they had a nuclear warning flash go out, right? Somebody pushed a button that said nuclear is imminent or in danger. I always wonder, how could that happen? How could we have that kind of mistake? All right, and I'm not saying there was any nuclear launch. I'm saying, how could somebody make that mistake by accident? You know, it would seem to me that there would be a few more controls that would stop it. And I would bet you if the stock markets were open, they probably would have been selling off pretty good. But when you look at the overall markets and you look at copper, okay, copper is starting to sell off. It looks like it's peaked. It looks to be under pressure. You look at oil, that looks like it's going to the moon. Okay, you look at gold, that's going to the moon. I mean, gold going to the moon is not necessarily logical with a stock market that's going to the moon. So again, the balance of things seems to be a little bit skewed here. And something that I'm not predicting what we're going to do next. I can't tell you what I'm going to do tomorrow, okay? But I can tell you that I see things that should be somewhat of a concern. I see certain companies that are starting to roll over and start to go lower all of a sudden that shouldn't. You know, it's like if you remember from the movie Trading Places, and they had the inside information, and they go, that can't be right. Well, guess what? The markets are always right. So when they decide to do what they're going to do, and right now they're still deciding on an upward path, and you're having every pundit, every advisor, every broker telling you that this time it's really different. Okay, this time it's really different. And I wonder, does anybody, and I hope none of you believe that it's ever different, because at some point the markets will make a decision. You still have a few things to do. You still have to make money. Now, why haven't we ever recognized this market as somewhat of a bubble? You know, as you know, I continue to talk about numbers never lie. Only the people that report them do. And when you look at some of the numbers, you have to wonder how we can be so wacky and think that we could never have a problem again. The numbers are not spectacular, okay? The confidence numbers are spectacular because you're talking to about 3 people that are confident, right? But look at the credit card scores. Look at the credit scores around the globe. Look at the average incomes. We're still well behind where we should be when you look at what the stock market has done. Okay, we're not out of the woods here into anything, and of course, the bigger problem is that we can't get anything done in Washington because we've got, other than these small things. What about healthcare? Is anybody addressed the overall healthcare that's costing everybody a fortune? And the answer is no. I know it will be eventually, but isn't this the time now to get these things done? That would be something that would create a lot better information. That would create a lot better economy. But when you look around, you still are seeing small business wiped out. That is not what we need. We need to create more competition for the big guys, because that's what keeps the middle class, A, in new business, B, fair pricing for all of us. True competition. I'm getting tired of not seeing the true competition. I'm tired of seeing Amazon wipe out all the small retailers and Walmart wipe out all the small retailers. I'm tired of seeing JP Morgan and Bank of America and all those guys wipe out all the small banks. That's where I think is where nobody's paying attention. This is like, if you ever read the book, The Creature from Jekyll Island, this kind of almost goes back to that saying that they want to wipe out the entire middle class by having all these big conglomerates take over, okay? That is something that I think that needs to be looked at and observed. And so tax plan or no tax plan, good economy or no good economy, if you destroy and take away the hope and the opportunity of the middle class, you create a much bigger problem. And I think that is why we see so much activity in the cryptocurrency world. And that's why when I come back with my commentary, we're going to talk about what I think is a revolution. What we'll call it is the financial revolution. This is Bubba's Bottom Line, Todd Bubba Horwitz. And of course, we're going to step out here for a break and come back. But in the meantime, I want to remind you, highschoolinvesting.com, check it out, and go to patreon.com/Bubba Trading. Help a brother out. And of course, in the meantime, also, the Bubba Show has moved time slots, 4 to 5 Eastern, libertytalk.fm. Get Bubba's daily updates at BubbaTrading.com. And it's back to the show and my commentary. Welcome back to Bubba's Bottom Line, Todd Bubba Horwitz. And of course, as you all know, if you've listened to me for any amount of time, I am not a big fan of the Federal Reserve. I think that they are a clueless bunch that could not find themselves the way out of a corn maze if you put them there and gave them a roadmap. They refused to ever call a market a bubble in the time, except they were willing to call the cryptocurrencies a bubble immediately. Now, what are the cryptocurrencies? What is the effect and what's going on? Well, in my opinion, and this is obviously my opinion piece, so it's to be my opinion, is that we're seeing a financial revolution. Now, I've often called on the Bubba Show, the radio show, for years, that we would see another revolution in this country. And I believe that we are seeing a revolution through the currency markets. I believe that this particular rush, we can't call it a gold rush, but we call it a crypto rush. This particular rush into the cryptocurrency space is a way of the Americans and people around the world, because the Americans are not the only one that are being tortured by a central bank. The Americans are not the only ones that are being tortured by a broken down, crappy government, okay? So to me, I look at this as a financial revolution that says that we're gonna try to get around being involved with the Federal Reserve, so you can't steal any more of my money, you can't devalue any more of my currency, you can't reach into my pocket and take any more of that money out by making it worth less, okay? You know, if you've looked at a dollar bill recently, if you've ever noticed, they all say notes, they used to say pay the bearer. You know, so there's a whole bunch of things going on here. And I think this is a message that's being sent, which I think is gonna last, okay, is that I'm gonna get my own currency. I'm gonna use Bitcoin or Ethereum or whatever one you're going to use. And I am not going to be involved in letting the central banks and the government manipulate my cash nor overspend my money and make it worth less, because you understand that the job of the Federal Reserve is to continue to inflate asset prices so that we can pay more taxes, diminishing the value of your overall dollar. So even though you feel like you're making $100,000 a year, 30 years ago, if you were making 20, you'd be making more than the 100 you're making now. You know, if you look at some of the growth values in the extremely wealthy since, you know, go back to 87 if you want. The big guys have more than zoomed over the top, 30, 50, 60, 100 times worth, versus the average guy is 2-3 times. Doesn't make sense. Right? And this is my view, is that you're seeing a run into the cryptocurrency space, and it's getting bigger every day. Okay, now Bitcoin appears to be, might have run its course, but it's still holding in the 13,000 range. But I think there's now over 2,000 coins. And again, some of them are bubbles, some of them are, look, some of it's right, some of it's gonna be like the internet, but they're gonna last. They're gonna be here for the duration. They're gonna fit into this blockchain, either as utility coins or as a currency. But I think the Fed and the governments are now concerned, and this is where the issue comes in. I think you're trying to see them regulate some of these. I think you're trying to see them stop some of the exchanges. I don't know how they can, but I think that is something that is now creating the next problem here. And you're seeing that, I know South Korea is trying to stop the trading in of Bitcoin. Again, I don't know how they can do it because it's a decentralized market. You've got every government trying to get involved and stop it, of the ones that can print the money. Some of these smaller ones, you know, are getting more heavily involved in the cryptocurrency space. And I believe that this is going to actually be a mark against the Fed and against the central banking system. And that's where I think we're going to start to see some of this play out. And this is where I think you're going to start to see them lose some of their power. Now, again, this is just an opinion piece, but I do believe that this is acting as a financial revolution. I do believe that it's going to continue, and I think it's only going to get bigger. And I think this will create a major problem within the Fed and the central banks around the world and in many of the governments, and we'll see how it all plays out. And I think that might even have an effect into what happens this Friday coming, when the government has to decide whether they're going to shut down again and what kind of bad deal they're going to make. But remember, this is for real. The cryptocurrencies are real and they're spectacular. And I only own a little piece. I own very little, so I'm not talking my book. In the meantime, everybody have a great weekend. Have a great holiday. This is Bubba's Bottom Line. We'll see you back here next time. And of course, we'll see you every day for the daily updates. Bubba's Bottom Line. Have a great day, everybody. Thank you so much. We'll see you later.